Hi, I'm Chris Lee, and this is Virtually Speaking. Joining us today is Vinny Lingham, a serial entrepreneur and one of the most recognized and influential blockchain and cryptocurrency experts in the world. He is the co founder and CEO of Civic Technologies, which is a blockchain based identity management company, and is one of the sharks on Shark Tank South Africa. He's also a general partner of Multicoin Capital, which is an investment firm, one of the world's largest crypto funds investing in cryptocurrencies, tokens, and blockchain companies, reshaping trillion-dollar markets. Vinny is often affectionately referred to as the Oracle of Bitcoin when featured by major media outlets like Forbes, Fortune, CNBC, Business Insider, CoinDesk, and many more. His vision for the best usage of the blockchain is to create security, privacy, and identity verification and protection. Please join me now with Vinny Lingham. Well, hello, Vinny Lingham. Thank you for joining me on Virtually Speaking. How are you doing today?
Hey, Chris, I'm doing well. How about you?
I'm doing really good. It's good to see you. Good to talk to you as always. Excited to get into it today. Obviously, we are living in a time right now where your world is exploding and is more in the news maybe now than ever and more impactful than ever. Of course, you are the CEO of Civic, a company that is a blockchain based digital identity provider, if I'm not mistaken.
That's correct.
And
Yeah,
obviously, Shark Tank is a big show here in the United States, and they had spinoffs all over the world. That's awesome that you are one of these South African sharks. I'm excited to talk to you about all things business, but as it relates to the blockchain. And of course, I just mentioned Civic as a blockchain based digital identity provider. So let's start there with your company. Obviously, you got into blockchain a long time ago. Tell us how you got into it and how and why you started Civic.
so Civic was basically founded in late 2015, and the vision was to build a decentralized identity layer for what would really be the next wave of the internet. So I call it the blockchain Web 3.0 stack. And we've been working on that ever since. We were the first blockchain-based identity company to be born, and we've had a lot of interesting successes and failures, and trying to pioneer what happens in digital identity. And so it's been 5 years, just over 5 years since we started the company, and we're finally getting to the point right now where the market's catching up to what we saw 5 years ago. We were a bit too early, to be fair, when we started, and now it's getting to a point where I think there's a clear need for digital identity, KYC, AML in the crypto space.
So tell the people who don't know what that means, what a digital identity provider does, and what your
Yes.
vision of the company really was.
So our vision was that you could keep your personal identity information digitized on your device. So instead of having a physical passport, physical driver's license, in the real world, we need those things when you walk into a bank to open up an account. But if you're in the online sort of decentralized financial world, where blockchain and cryptocurrencies play, you don't speak to anyone, you don't see anyone, you've got to provide information and verify your identity. And that's a little more difficult to do because there isn't a physical infrastructure. So we take your information, we digitize it, we'll help you to store it on your device, we authenticate the face on the driver's license, the passport with your face on your phone using some advanced cameras. And the cameras have gotten a lot better over the past 5 years than they were 5 years ago, clearly. And so we can, to a very high degree of certainty, guarantee and validate the identity of people who are participating in the blockchain crypto ecosystem. And that's what we do. So the same way your bank verifies your identity when you walk into a branch, we do it digitally.
So how does the digital identity that you have on your device then get used? How do you use that, in your transactions? Where do you need this kind of a service that Civic provides?
We focusing very much on places. So it's good examples of in the NFT space. Creators need to verify their identity to sell products as digital NFT art, and we help NFT companies with that right now, so they can verify who you are. So you're earning income from their platform. They need to know who you are. Issue 1099 or whatever it is, we help with the ID verification process for that. So we're helping companies that need to identify who their customers are, and we do it using identity.com, which is a blockchain-based smart contracting platform, which we helped establish. It's a non-profit organization, but essentially it's a marketplace or exchange for people to use to do ID verification in the crypto world.
Awesome. That's amazing. And, the blockchain, I think people understand that cryptocurrency is on the blockchain. Now you're talking about, of course, this digital identity is on the blockchain. So it seems like for people who don't know that much about the blockchain, but want to know more about it, companies and businesses and industries are all getting on the blockchain, right? Is that where they belong? Is that where the future is? Tell us what the blockchain has to offer and why things are going there.
So let me start by saying that we're very early on in the evolution of the cryptocurrency world. Like this is like kind of like early 2000s, we compare to the internet. And what this new sort of call it revolution is about, it's about programmatically making sure that transactions can happen without a trusted third party in between. And what that means is, when you do what is a smart contract? A smart contract is basically a digital contract with a set of rules that, as long as everyone agrees what the rules are, it automatically enforces those rules. And so that means that if I had agreed to buy it, let's say, for example, I wanted to buy a piece of property from you at a certain date and time, and as long as I deposited the cryptocurrency in a certain wallet, the ownership would change from you to me on a certain date. You can write that into a smart contract, and so people can buy and trade, whether it's property, land, or NFT, non-fungible tokens. You can do that using smart contracts today. And so the blockchain world is basically allowing us to effectively get rid of paper and pencil and printed signatures and contracts, and just make programmatic contracts that exist out there that are enforceable. And there's lots of different use cases here, and so we can dive into some of them. But essentially, it's an ecosystem built upon programmatic rules and not courts and adjudication by arbitration and all that sort of thing. This is the contract. If you transfer X currency to this wallet, these things will happen afterwards.
Awesome. And of course, there's no chance for the transaction to be delayed. It's instant. It's just between the two parties. There's nobody in the middle, as you said. And also, there's really no chance of people stealing the money or the money going to the wrong place. It's a very safe, unhackable transaction. Is that correct?
I wouldn't say it's unhackable yet. I mean, we're still testing out a lot of some contracts have been hacked, etc. But because it's all open source and it's becoming more and more tried and tested, I think the risks are much lower than in the real world. And so you have these, for example, DeFi, decentralized finance. You have these massive platforms that run what they call AMMs, automated market makers, which basically allow people to earn yield on their cryptocurrency, borrow. If you have a Bitcoin, you don't want to sell the Bitcoin, but you want to borrow $20,000 against it. Bitcoin's worth 60 today. You should be able to borrow against it. So the way the contracts work is I deposit a Bitcoin and then I withdraw some US dollars in a tokenized format, so like USDC or USDT or whichever currency you want. And if the Bitcoin price drops below a certain point, those coins will be sold to defray and protect the person lending the coins to you. But this is all done in a very trustless way. So you know that you know what you're putting down as the collateral, you know what you're borrowing against, and you don't need to talk to anyone. You can just go to a platform and effectively borrow against those coins.
That's awesome. And so obviously we are going to talk about crypto a little bit, of course. You were known as the Bitcoin Oracle, or the Oracle of Bitcoin, for many years. Everybody had you on TV and you were predicting what was going to happen. I mean, you were really the Oracle. You really made a lot of people a lot of money. And everybody always wants to hear what you have to say. When I've met with you and talked to you, you seem to be always right on the mark. You're always definitely advising caution and carefulness with your money. But this is an amazing world that we're living in now. We were in a pandemic, and yet the stock market went up, and cryptocurrency is now more valuable than ever. Um, and is it because it's people are realizing that they want to have more control? It's kind of the theme in society, in business, and in also, you know, in people's personal lives. People want things to be decentralized, right? People want to have more control. Is that why there's popularity here around this, or is it just inevitable? This is the future, and now people are finally realizing that. What's going on?
What's going on, I think, is that we're moving to a world where it's effectively global markets, right? So because it's trustless, because it sits outside the sort of function of governments, governments don't know what to do right now. So cryptocurrencies are basically uniting the world's populations, and we've got 7 billion people out there into single global markets. So there's a global market for Bitcoin right now, for example, where there are billions of people who want to own Bitcoin, or at least hundreds of millions right now that already do. And these people can buy it from any country in the world. One Bitcoin in America is the same Bitcoin in China, the same Bitcoin everywhere, right? So you've got these sort of global units of account and stores of value like Bitcoin. You've also got Ethereum, you've got other cryptocurrencies, Filecoin, etc. And these are sort of, whether you want to look at them as public utilities or public assets, they now have massive audiences. So look at stock markets, even 20 years ago, you could, and still today in many countries, the only people who could buy stocks in a certain country are people who live in that country. So the price for those stocks tend to be, reasonable, because supply and demand is limited to the local market. Like, I'm from South Africa originally, and I don't think there are many. I don't have any American friends. I live in San Diego now who trade on the Johannesburg Stock Exchange. It's just not a market that is linked to the markets that we trade in over here. But with cryptocurrencies, you've got the benefit of global markets. So if somebody likes something in one country,
Right.
they will arbitrage the price up. They'll buy it. Whereas if there's an undervalued stock in South Africa, no one really knows about it. No one's going to buy it. No one's going to bother. It's priced in rands, etc. So what you're really seeing is in the cryptocurrency market right now is the unlocking of the potential for the human population on Earth to combine and allocate capital on a global scale, not on a local scale, not in a certain country, where rules and regulations dictate that capital markets are constrained. This is unconstrained capitalism on a global scale, and that's what's really happening. And this is why Bitcoin's worth $1 trillion. This is why multiple other cryptocurrencies are worth in the tens of billions. You've got Ethereum, 200 billion roughly. When you have limited supply of some of these cryptocurrencies, which are actually really valuable in their own right, but you have 7 billion people, it's very different from having a company in a market with 20 million people and only a small percentage of them will buy and trade that stock or whatnot. So we're seeing the power of what really is Metcalfe's law. It's the network effect of having 7 billion humans participate in the global market.
Amazing. So the other interesting thing happening now is, Bitcoin is the dominant original, they say, cryptocurrency, but now China is coming out with their own government or country cryptocurrency. And people are saying the United States needs to come up with a digital version of the dollar. Tell us a little bit about what countries are doing and why Bitcoin is still number one. And is it because is it the original, or what's really the reason behind Bitcoin's success?
Bitcoin has the benefit of being the first. It isn't the only, but it is the first. And it has a different use case that's being focused on. So the so-called store of value use case. I don't know what level of scale that gets to. It's probably 10x for where we are right now. Will Bitcoin become the store of value for the whole world, where you have $100 billion or $200 billion stored in Bitcoin? I don't see that world, but I do think it's worth a lot more than where it's priced at today. I would say, a couple $100 billion, a couple $100,000 wouldn't be, outside the realm of imagination. Maybe $1 million, but that's going to take a long time to get there. So what happens with China is leading the pack right now and saying, well, they want their currency to become the global sort of unit of account and challenge the dollar, and they're digitizing it and making it a global currency. So they're trying to create this global market for Chinese currency, which is a huge threat to the US dollar. And so, but we understand the politics in the US versus the politics in China are very different. The chances of the US government launching successfully a US dollar and deploying it worldwide and beating China at this point, where they're so ahead of the game, I'm skeptical. So maybe it could happen. but the politics involved in getting a digital dollar out there is just going to be, if you look at what Facebook had to go through with their currency that they try to put out there, the congressional hearings, et cetera, et cetera. I just don't see America competing with China at this. And I think China may actually win that race because they've got a big head start. So then we're left with what's left. We have the US dollar, which becomes a legacy currency, and maybe there's a digital version that comes out 2 or 3 years after China gets a head start with their currency. And by the way, I think the US should get a digital dollar out the door this year. I don't think we can wait. I think we have to get it up now, but I'm skeptical that the political situation will allow for that. So China's digital currency is a huge threat to the hegemony of the US dollar, and that's why I think people are going into Bitcoin as an alternative, because not everybody wants to see the Chinese currency win, and obviously China does, but Bitcoin is a bit of a counterplay. But the downside is that a lot of the mining happens in China. So if their currency took off, what happens to the mining operations, Bitcoin mining operations in China? So it's a dynamic situation. You can't kill Bitcoin, but as Balaji Srinivasan says, who's a pretty thought leader in the crypto space, he thinks there'll be a split at some point where you have two Bitcoins. You have a China Bitcoin, you have a non-China Bitcoin, and that becomes another play. So a lot of these things can play out, actually.
Interesting. And all of the Bitcoin will be mined at some point, right? We're almost 2/3 of the way there, or 3/4 of the way there. Is that right?
We're 90% of the way there.
Oh,
yeah.
So once it's all mined, and how many total Bitcoin are there?
There's 21 million supposed to be, but keep in mind about 4 million is probably lost. So there's really about 17 million Bitcoin left in circulation.
So why does that matter? And why do people need to understand that Bitcoin is not going anywhere? Or tell us how it's not going to go anywhere. And why does that matter that there's only 21 million Bitcoin available?
So, I mean, look, this is a long conversation, which I think could take us more the rest of the show. But yeah. I would say the short answer is it's a limited supply asset. It's at $50,000 right now. If you're a millionaire, a multi-millionaire, you should own. I always tell people, like, just buy, 1 Bitcoin per million or 2 million that you have and put it away and hold it and just, think of it as insurance, because you never know. You could look back a couple of years time and go, wow, that was important that I actually bought that because, geopolitical reasons, whatever. And so I really advise, I mean, look, if every millionaire in the world try to own 1 Bitcoin, there isn't enough to go around.
Right.
There's 17 million Bitcoin. There's probably like 100 million plus millionaires in the world. So, if you're a millionaire, you don't have one. It's kind of like, you're taking a chance, which you probably shouldn't take, because Bitcoin is a good, sort of foil against any geopolitical risk that could happen over time. You don't have to go and back up the file and put millions of dollars into it, but you should probably own at least one. And if you're not a millionaire, should you buy Bitcoin? Sure, you can put a bit in, but it's not, it's expensive as an asset. It may not have the same return risk profile that you need. And so the higher up you go in terms of wealth, the more you can take chances on speculative assets like Bitcoin, which is still a speculative asset. And the less wealth you have, the more you should probably invest in, like, making sure you have a good home and property and whatever else. So everyone's different. Young kids coming out of school, they ask me, like, what should they buy? Should they buy Bitcoin? Should they play the cryptocurrencies? I'm like, look, you don't have kids, you don't have overhead costs, but you want to do whatever you want, whatever you think. Do your research and see what gives you the best sort of upside where you can have a 10, 20, 50x return, and you don't really have much to lose. But when you have more to lose, it's a different calculus. So everyone's different. This is not financial advice. I will just say that people should, at least have, if you're at some level of wealth, you should at least realize that there isn't enough Bitcoin to go around should it become a global standard for wealth protection.
What is the use case for Bitcoin and cryptocurrencies going forward with companies, with businesses, with transactions? I mean, is this something that eventually can be something that we want to do more than any other transaction that we do? What's the benefit to doing it? And what's the benefit for a company to accept Bitcoin? We've seen Tesla do it. We've seen, I think, MasterCard and Visa are accepting payments for people's debts in cryptocurrency or at least Bitcoin. Why would they want to do that? And is this something that we're going to prefer doing in the future?
Yeah, I think that the ease of commerce across borders, like digital dollars moving around, Bitcoin, getting rid of the foreign exchange control sort of companies. The forex market's a big market, right? And people are buying and selling foreign exchange all the time. They're taking margin. They're taking 1 or 2% on either side of the trade. It pushes up costs of people trying to do transactions. So it makes it seamless, makes it fast. Like even sending a wire takes forever, error prone. People lose wires all the time. It doesn't happen in crypto in the same way. You can at least send a cryptocurrency and settle. So I think it's going to allow faster, cheaper transactions to be settled globally. And if you can get the compliance stuff right, it's actually going to be better than the banking system. I mean, I see a lot of banks trying to get into crypto, and they do it defensively. But the fact of the matter is, if crypto is successful in 5 or 10 years' time, we're not going to need the banks of today. We'll have a new type of bank, but the banks of today won't exist. They'll be out of work, literally. The bankers will be like, yeah, well, this stuff's all fully automated. It's all programmatic. If you're a banker and you can't write code, you're probably going to be out of a job in 10 years because literally it's going to be fully automated systems that run all this. It's called autonomous systems here. And so it's the same as AI. AI is eating the world in a big way, right? So artificial intelligence, programmatic automation, this is what's happening. So, the big banks will keep fighting back and try and do stuff to make them look like they're doing crypto, but they have brands that the crypto community doesn't care about. Like no one in crypto cares about Bank of America, Wells Fargo. We laugh at these guys because they're dinosaurs, right? And we don't see them ever coming into the crypto world to figure out how to re-engineer themselves. So what's going to happen is crypto is going to continue to grow and innovate, and eventually they'll be the Barnes and Nobles of the financial world, and that's what's going to happen. And it's almost guaranteed to happen. The question is when.
Or the blockbusters.
Yeah, blockbusters, exactly. And we've seen this play out so many times in the past. And you go back in history, you look how Blockbuster fought Netflix, and Barnes and Noble was like Amazon's and everything. And you hear the comments, even BlackBerry CEO, like you hear the comments that they made trying to defend their position. Even Ford, GM, all these companies, when they look at like Tesla, they can't believe today that Tesla is bigger than all of them pretty much combined, right? And they just they're like ostriches. They put their head in the ground and they just refuse to believe that disruption happens. And see how there'll be disruption. So if you've been around technology for long enough, you see this disruptive cycle happen over and over again. You see that leaders of industry, so-called leaders, the CEOs, the geniuses that run these companies, think that they're smarter and better than the sort of the engineers and programmers and technologists of the world, and eventually they see themselves go bust. The real question is time. It's will these big banks exist in 5 or 10 years' time? Probably not. And when I say not in the current form, the brands might exist. They may serve, the older market, but the younger folks don't want to deal with them.
Companies that are around today, companies that are small businesses and Fortune 500 companies, are they all going to have to start accepting payment through crypto? And are they all going to have to put everything on the blockchain? Is this something that everybody needs to do, or else we're all dinosaurs?
I think we're going to have to make sure that the crypto market fills a certain gap, and like any good product market fit, but there's just the smartest people in the world working in the space trying to figure this out. So I have faith that we'll figure it out. I mean, literally, some of the smartest people I've ever met are all now in crypto, and they're all mathematicians and computer scientists and engineers, and we're trying to make sure the world's a better place, and we're trying to do it by removing, a lot of I'd say the evils of society by making things not subject to opinion, but code, and make it programmatic. So you've heard a lot about systemic racism and those sorts of things that popped up. And that's all because the systems of today are being engineered poorly, designed by people who are, quite frankly, biased or stupid or both. And we have to get to the point where it's just literally, it's code that's making the decisions. And it doesn't matter what the color of your skin is or how old you are or any of that stuff. It's like, look, the system works purely on code and it's unbiased. And that's what we're trying to get to in the crypto community, I think.
What is the most common usage of the blockchain that you see companies doing that weren't in the blockchain, that are, like you said, older companies, dinosaur companies that maybe are saving themselves by getting on the blockchain? What's the number one way they can get on there and do something to make their company more successful and be part of the future?
Probably fire their CEOs and hire someone from the crypto space.
Wow.
I mean, like quite frankly, that's probably the only way forward because most of these guys are doing it. You know, anyone who's trying to, it's very difficult to reinvent an existing established business, and a lot of these CEOs think that just adding Bitcoin somewhere in the roster is going to change the whole profile for their business. It's not going to. You have to reimagine and rethink it. I mean, I would say like PayPal has actually done a pretty good job of bringing crypto into their platform. But most other companies aren't going to do that. And I speak to a lot of banks, by the way. They always contact me asking me for opinions and this and that.
Right.
Then they go away and they don't do anything about it. So yeah, it's just a total waste of time. They're just kicking the tires as usual. And it's because as they go up to the top, the CEO kicks it down and says, "Nah, we're not doing this. We don't want to disrupt our core business." But whatever. This is Netflix blockbuster all over again.
Well, Vinny, this is all amazing stuff. It's always great to talk to you, and obviously an exciting space that you're in. And I really appreciate you coming on and trying to help everybody understand a little bit more about it, especially during this really exciting time in your industry.
Thanks, Chris. It was great to be here and enjoy the chat.